Hey everybody, Smart Silver Stacker here. So the price of silver coming under some fairly significant pressure this morning. At the time I'm recording this video, the silver price is back down under 23 bucks, pretty well under it. And when you look at what triggered the sell-off this morning, the continued sell-off in the price of silver, I think it's a fairly ominous omen in the short term for the silver price. And I think we could see a collapse in the price of silver in the relatively short term. But when you examine this in light of the big picture, this is not necessarily a bad thing for us silver stackers. Now, I know that might sound a little bit weird, but I will explain to you exactly what I mean in today's video, so stick around. Today's video is brought to you by sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. It's where I buy my gold and silver, so make sure you check them out with the link down in the description. So what kicked off the sell-off in silver today? It was the release of the Producer Price Index. This is a measure of consumer inflation. Basically, what this index measures is the selling prices that domestic producers receive for their output. And the number came in month over month up 0.7%. Now, back in July, so this was the August data that was just released, the July number was 0.4%. And the consensus forecast was that we would see another 0.4 print in August, but instead we got 0.7. So a pretty significantly higher than expected inflation number this morning. Now, what's the dynamic that we've been witnessing? You get high inflation numbers, and then you get a sell-off in the precious metals, because we know what is driving price action in these markets. It is anticipation of what the Federal Reserve is going to do next. So every time you get a higher than expected inflation number, you see a sell-off in the price of metals because investors become convinced that the Fed is going to be more hawkish in their quote-unquote inflation fight, them hiking rates. And here's the thing, inflation is out of control. We know that. It is very likely that these inflation metrics will continue to come out hotter than expected. And so that is why I believe we may see continued declines in the price of silver. And also, we got a letter today from a prominent senator written to Janet Yellen. This letter, I think, gives us a sign that in addition to rising inflation, we may very well see some other factors contributing to a major pan sell-off, systemic collapse in the very near future. And I will get into that in just a moment. But first, I want to take a look at this chart. You can see there's this long-term downward trend line back from the 2011 highs in the price of silver. And there's also this sort of cup and handle pattern forming. And right now, silver is trading within this downward trend channel. Now, if we zoom in on this chart, you can see that silver basically touched the top end of this trend channel very recently. It bounced off, and that is when this sell-off began. And if you want to get an idea of how far silver can fall, how far the silver price can drop in the event of some kind of a pan sell-off, I think this chart gives us a pretty good idea. And it looks like we might be witnessing a collapse in the silver price down to about $15 if you get this major pan sell-off across assets, including precious metals. So, if you want to know how far we could see the price collapse, I think that is a pretty solid target. And the fact that silver has been bouncing around between the top and the bottom of this trend line is indicative that, we're getting closer and closer to a big move. But I think that drop might be a bit of a head fake, and I'll explain to you what I mean. So I want to take a look at this letter. This was penned by Senator Elizabeth Warren, who, it's not real often that I agree with too much of what Elizabeth Warren says. However, this letter is one that we should all be paying attention to, because there are some clues in here as to what is around the corner, what could trigger a pan sell-off, and also what the government response to this will be. So here's a quote from the letter to Yellen. "I urge you to take strong action to address the alarming fallout from high interest rates and protect the safety of our financial system." Now, in this letter, Elizabeth Warren also argues that there are three factors at play here which threaten the financial system, specifically the banking system here in the US. She says it's a decline in the value of banks' bond portfolios, losses in commercial real estate, and losses in the leveraged lending market. Elizabeth Warren is actually accurate in many of these statements. Now, she doesn't mention the role that the Federal Reserve had in creating these problems, by inflating a massive bubble in the bond market, for example, by keeping yields low, artificially so, for a very long period of time. She doesn't mention the role that the federal government had in creating these systemic problems through programs like the FDIC, creating all this moral hazard and eliminating incentives for banks to actually behave responsibly. But nonetheless, these are three factors which are massive threats to the financial system in the US right now. And it's very interesting that basically what Warren is saying here, I mean, she openly challenges the fact that the Fed is even hiking rates. Of course, again, she doesn't acknowledge the role that the federal government has in rising inflation through their massive deficit spending. You know, part of the reason that the Fed feels like they are compelled to raise rates, you know, to fight the inflation. So she doesn't acknowledge that half of things. So it's a bit of a half-truth, I think, what she's saying in this letter. But the important thing to take away here is, you know, she is openly challenging interest rate hikes as a policy measure. She feels like it's a dangerous thing for the Fed to be doing. She doesn't want them to do this. She wants easy money. You know, she's one of these modern monetary theorists. And the reason I point this out is because when push comes to shove and the financial system really begins to collapse here, whether it be because of the losses that they've got on their bond portfolios, or whether it be because the commercial real estate sector cannot withstand higher rates, I mean, whatever it is, the straw that breaks the camel's back, when the financial system really breaks, I think we all know what politicians like Elizabeth Warren are going to be advocating for. I mean, they're going to be talking about slashing rates. They're going to be talking about bringing the yield on bonds back down. And, you know, how does that occur? Well, the Federal Reserve has to fulfill their role as the buyer and lender of last resort. They've got to come into the market with massive QE, with massive stimulus. And to Warren, you know, this is exactly what she probably thinks needs to be going on. When she's talking about Yellen needing to have a plan to shore up these regional banks. Well, if Yellen can't get the job done, they're going to pass some massive spending legislation to revitalize the economy when this collapse actually occurs. And that's why I feel like any drop in the price of the precious metals, or, you know, in inflation hedging assets that you see leading up to this collapse or as a result of this collapse, is not necessarily a bad thing for stackers. I mean, it may just be the last opportunity we have to buy precious metals at the absurdly low prices that they are, because when that intervention occurs, when this collapse occurs, the intervention is going to involve the creation of so much fiat currency and the creation of so much, you know, inflation. And when I say inflation here, I don't mean price inflation. I mean kind of in the Austrian sense, the expansion of the money supply, because the Fed is going to be monetizing so much debt. It's going to make QE for the past 15 years look like child's play. I mean, we'll be seeing massive expansion of the Fed's balance sheet. And when that happens, the price of the precious metals, I believe, is going to skyrocket. So even though we may be on the cusp of a collapse in the silver price, personally, I will view that as a buying opportunity if it takes place. It's not financial advice. I'm not telling you what to do. I'm just sharing with you my thoughts. The likelihood of us having some kind of a collapse or a massive sell-off across asset classes without witnessing massive government and Federal Reserve intervention, I think, is just about nil. Again, just my opinion, not financial advice. But let me know what you think down in the comments below. I just like to hear what you have to say. And thanks for watching, everybody. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker, out.